Hello traders, it's Samurai Trader here. I've posted a number of videos on YouTube where I've promoted my fast track day traders program. Now my program is also suitable for swing traders as well, as my setups work in all time frames and all markets. And I've had a number of people ask if I could please give some trade examples directly off the charts, which the purpose of this video is to do that. Now I'm going to cover a little bit of background information for those people that are watching this video for the first time. Many of you already know the sort of work I do. I've either coached, or you've worked for the firms or some of the companies, or attended one of my seminars that I may have presented at. So of course I need to just talk about the risk. You can even if you haven't already done it, actually please expand your YouTube video up to full screen, so you'll be able to read the risk in full should you desire to. Now at the end of this recording, we'll look at the last few days of trading action on the futures markets. So I prefer to trade futures. I do trade Forex, being the euro and the Aussie dollar, but futures is the main market that I trade. Now I will just be showing you a number of charts and just a few trade examples. Otherwise this will be another 4 or 5 hour seminar. We could spend a lot of time. So let's get the advertisement out of the way, over and done with, so then I can have you focus and concentrate on what I'm going to say. So if you haven't already done, please subscribe to my YouTube channel so you can be kept up to date with my trading recaps, etc. I just released last week a video on trading patterns. I'm recording either today or tomorrow the second part to trading patterns. Then I'm doing your trading plan. There's a whole series of different videos that I'll be releasing. So if you subscribe to my channel, you'll be able to be kept up to date. Now I've just released a program which I charge $197, which has got over 5 hours of video, online video instructions of the world's best day trading and swing trading strategies. As you're about to see, hopefully you'll see that I've got the credibility. You'll see who I am and what I do, so I'll have the credibility there. Also, I will be releasing or launching a live day trading room, which per month it will be $295 a month, or $600 for 3 months, per 3 months. There will only be 50 members only, just because as you see and as you're about to see, I'd live day trade myself. So I've got too many people there. I'm not going to be able to trade effectively, and trading is my lifeblood. It's what I live for. I love it. So learning the strategies, if you are new to trading, one of the challenges I've got is this, that when you look at the charts that I'm about to present, you may look at them and say, gee, I could never learn this. Traders, after 30 days of watching the videos, spending 1 to 2 hours a day, everyone has what I call the aha moment. Aha, that's how it works. Well, learning these strategies is as easy as 1, 2, 3. You watch for the pattern. Does it meet the rules? You execute the trade and manage. Traders, I am a pattern trader. I look for patterns. The great things about the markets is patterns repeat themselves every single day. I'm also what you call a sniper trader. That is, I like to cherry pick my trades. I'm looking for, if it doesn't meet the rules, that is, if it's not exactly what I'm looking for, I'll give it a miss, because as they say, there's always another bus around the corner. In short-term trading, particularly day trading, I would typically have between 4 and 20 trading opportunities on the main markets that I trade every hour. The maximum I usually live trade for is 2 hours a day. My daily goal is $200 per contract I trade, and you'll see that on some of the trades that I take and how I do that. But the message I also want to get across to you is you don't have to do what I've done over the last 22 plus years. You don't have to make the huge investment that I've made, and in many ways I've been very fortunate and blessed in many ways because of the people I work with, the traders, institutions, the investment that I've been able to make in the area of research and development in the trading industry. Now I'm a great believer in personal development, and some of the people I follow are the Brian Tracy's of the world, the Robin Sharma. Robin Sharma is just absolutely brilliant, and so is Tony Robbins. Love them or hate them, as I say, they've all got some brilliant stuff in their messages. And one of the big messages I get across to all traders is success leaves clues. Model the success of others. And that's where traders, I've been very fortunate to be able to model the success of many other traders through both reading, studying their materials, traveling the world, attending courses, employing some of the best people. And as getting back to many of you that know the sort of work I do, I'm heavily involved in some institutions, and particularly a very large company putting together what we call follow me accounts. I can't mention the name of the company at this stage, but I'm involved in their research and development of trading systems, which I'll quickly show you in a moment. My pretty self there, my handsome self, and I have a huge library of books, tapes, videos, courses, you name the courses. I've probably attended it and purchased it. Now, as I'm saying to traders, you don't have to do this. I've had the cash to be able to do it, and because I'm involved full-time in it, this is what I do. Save yourself time, money, energy, and frustration. You don't have to go out and do all of this, because what I present to you is the best of the best. For years now, I just quickly grabbed a few of my folders here, and whenever I trade or whenever I attend one of the research and development meetings, I take copious notes. I have over 100, and I think it's 122 of these spiral bound notebooks with a huge amount of resources in them that I draw on. I go back and review from meetings with traders, from some of the work I've done and the research I'm doing, once again saving you a huge amount of time. In the background of my office here, you can see folder after folder, once again more books and tapes and CDs down below, but folder after folder of hundreds of research papers on trading systems that I've either purchased, or we've researched, or we've developed in our own right. Hundreds of them. Now, for an example, here's one here in the comments here over the past several days, a full range rule of two. It's a concept we have going at the moment. Has had exceptional periods of success. So I'm also heavily involved in automated systems. Now, let me say this right from the outset, is that the beauty, or when you look at this particular chart, you can see it's a wonderful trending chart. Where these programs fall down are in periods of consolidation, red flag news announcements, and things like that. So automated trading doesn't achieve anywhere near the results of the human eye and our manual trading of manual executions that we do. This is directly of some of the research that I'm doing at the moment, where the concept, what it says down the bottom here, is developing the follow me programs. For the follow me programs to accept hundreds of subscribers, with this particular firm, they're going to be executing trades on behalf of the clients. So clients will open up an account with the broker. These are then automatically executed, so the account name is in the client's name. So the big thing you need to consider with these programs, and where a lot of firms have tried this and it hasn't been really successful, is you've got to allow that if you're on a shorter time frame, and let's just say a market I heavily trade, the NQ, the NASDAQ 133 tick chart, you go and have 500 accounts execute at the same time, you're going to get massive slippage. That's the reality of that sort of trading. So what we're experimenting with here and testing is various time frames, of course, having top-down research, etc. This here is we're doing live account trading on this little concept. Whoops, actually I didn't put the chart in on this one, but we've got another one where we're using hedge. We've got a 12 hedge system. I'm working with a brilliant programmer out of LA, Tom Brown, absolutely brilliant. We've got a fantastic hedging program that we're putting together. So I'm heavily involved in the research and development of trading systems and strategies, besides day trading being my passion. That is the very reason why you should be listening to what I do. So if we consider then getting into the strategies themselves, there are really three main markets. Well, the market is really either trending, we've either got a breakout, or we're range bound. Now of course you've got counter trends in there, of course, but these are the main things that I'm looking for. And just as a craftsman has a number of tools to work with, I have a number of trading strategies I use. Trading strategies, well, forgot to put the I in there. I use for the 3 different market conditions. Now trading is really easy: buy dips and sell rallies. The trend is my friend. Now for newer traders, and even for the more experienced traders, and many of you have heard me promote this before, traders, become a specialist. I'm going to show you a number of trading strategies now, but what I want you to do here is to focus on one and learn one. If you become one of my clients, one of my students, and I end up coaching you, or if you're with one of the institutions, what you discover is they'll use just 1 or 2 different strategies, but they're masters at it. And let me ask you this: if you go along to well, who earns the most money? Let me put it another way: a general practitioner as a doctor, or the specialist? The specialist does. The specialists are the ones that bring home the big dollars. So by becoming a specialist, that is mastering where you own a setup, this is the way to trading success. Now for those traders that have failed a number of times, I already can see you rolling your eyes, because I deal with traders like you every day. And please, I don't mean to be offensive here, but you need to go back to the drawing board. You've got to relearn, you've got to retrain yourself, because you do develop, and traders, this may sound strange, but traders that have given trading a go suffer from a huge amount of psychological damage. They truly do. Even in and I'm digressing a little here, but I've got to mention this, is that even when you learn how to trade using a simulator, you have to use that simulator and assume that it's real money, because what's happening is you are hardwiring bad habits. If you just go, oh, what the heck, it's only a simulator, let me have this impulse trade. Traders, you are hardwiring bad habits. Anyway, that's for another video I'm about to do. Let's get back to this. So I think Albert Einstein said this beautifully, where he said, small is the number of people who see with their eyes and think with their minds. Traders, what we do is, as a pattern trader, I'm looking for the patterns, then I'm thinking. And by the way, I won't go into this, but there's a huge difference between thinking and remembering. I'm thinking about my trading rules. Does it meet my trading rules? So let's go into the strategies that I'm going to teach you in my course. Number 1 is a T1 super scalper. This is a trend following strategy. Now if you can see the white paint bar here, the white paint bar is not necessary for TradeStation users. I have it, you receive that as part of a package. If you have a just a standard, if you've got NinjaTrader or some of the other packages, it's a simple concept that I show you how to pick these. But the T1 is really a huge part of my trading. And it's actually the key trading strategy. Both the T1 and T2 go together, which I'm about to show you. They're the only strategies you ever need. And if you want to learn how to trade, or if you want to be a low stress trader, you trade with the trend using the T1 and the T2. Excuse me, pardon me. Now I just wanted to show you on this particular chart, there are 4 different setups on a Euro chart here that I teach you in the course. We've got over here far left, we have what we call the T18, and the T18 is a trade that I take every single day, and you'll see that on the charts in a moment. Hugely successful counter trend trade, but there are certain reasons why I take this trade. We've got then here an 89 and 200 bounce. You can see we're bouncing off the 89 and 200. You've got an 89B, then you've got over here you've got another 89B as well. And what you can't see there, also one of these is also a T2. Now these are very mechanical in nature. They're very mechanical, anyone can learn them. And actually, if you were to ask, well, look, how mechanical or how rules-based are they? They're 95% rules-based. So what's the other 5% of discretion? Well, discretion is, do I have a trend? Well, we can see here that by my moving averages, yes, I have a strong trend. is it around a news announcement? So there are some things that you need to do, but overall they're very rules-based in nature, which makes it a lot easier to learn and trade. So looking at now the T2, the slingshot trade. So the first two trades we will be teaching you and you want to learn is a T1 and T2. The slingshot trade has been around for many years. It's a very high percentage trade. It's been used by day swing traders, position traders for many years. It's another golden trading setup for a certain rules that I've applied to it that makes it a very high probability trade. Now we can see on this little snippet of a chart I've taken, I've executed, gone along with 10 contracts here. You can see where I limited out for 10. Now this is on the, if I remember correctly, on the NQ133, so I would have been after I think 14 ticks, 13 to 14 ticks in that particular case. In the course, of course, I cover in great deal money management and also profit targets to take. So that's a T2, and we'll have a look at a live trade a chart in a moment to look at these on a chart themselves. One of my other top three is the T10. It's a money on the floor, sometimes called a ka-ching, and you can see there it comes up as a spelling error. Ignore that trade. This is why I'm presenting this, why I'm recording it on PowerPoint. Today it's showing up that red line. I assume you can see that. This strategy is closely related to the T2, that is, we use stochastics. I trade this setup every trading session, as you'll see in the charts in a moment. It's a very high probability reversal change in trend. This is traded correctly an 85% type trade. Now just on the point here of using indicators, of course, I also teach one which you'll look at it, the T25, but I just want to bring it up why I think of it is that I do use indicators extensively, as I do use price action only. All I'll use is an 89 EMA for trend direction. The saying is the early bird gets the worm, the second mouse always gets the cheese. That is, the first one that goes into the trap, it gets sprung, but the second one comes in and gets the cheese. That's how I look at it. The early bird on price action trading, you're going to get in earlier so you can have higher profit targets, so they may be slightly more riskier, but you've got a higher profit target. Lower risk with a lower profit target is indicators. So I do teach you both, and I trade both very extensively. We can see here some live trades off a chart. I've just taken a snag picture here. This is a T10 I've taken here. That was good for 13 ticks. Up here, if I remember correctly, I think this was a yes, that's right, this is a T19, another trade that was good for 13 ticks, and we had another T10. Now what you will notice here is that my profit target was the 89 EMA. Both were good for 13 ticks, all were for 10 contracts, limit 10, 10 10, and you can see here I entered two trades at once. Well, there's a number of reasons. One, this combination is very high probability, but also I have very strict money management rules, and I never per trade I'm always in at 0.5% maximum, and never ever do I expose any more than 2% at any one time. Remember, traders, this business is about risk management, and I still see educators promoting 5% risk management, etc. Traders, that is crazy stuff. There is no way known you want to be risking 2% is your maximum per trade. Down here, you may notice this is down under where I filmed this. It's there at that time I was doing a live session. It was 5 a.m. Saturday morning. It was 3:20 in New York, so even though there was a beautiful T7 there which took off like a rocket, it was time for me to wrap things up and finish for the day. So some of the other trades of a T18, which is a multi-time frame retracement and trend continuation strategy. Just another thing I want to mention here with this is that there are three main markets that I trade at any one time. The 133 tick, usually the 89 or 55 NQ, the YM89 tick, and the CL, the black gold, the oil. Now what I say to all new traders. There are so many trades coming out of those markets. Focus on one market, because what I'm showing you here is lots of different strategies. And you may say, well, why teach us 12? Why not focus on one? Well, I can give you one, and there's the top three that I teach you and say, look, that's all you ever need to trade the rest of your life. However, there are other ideal and ripe conditions where these trades come up, where they make perfect sense to take. As I mentioned, every tradesman has, or every craftsman has, a toolbox. And so that's what these are. These are tool strategies and techniques for certain markets and certain times. But getting back to them, I want you to focus on one, which is what I teach you more in the program. So we've got divergence. Your T19 is your classic divergence. We've got both A and B. There are two different strategies there that work really well. When I say work, they work brilliantly, quite frankly, but they're higher risk, and new traders and even experienced traders. And let's just quickly talk about this. If you're an experienced trader and you've struggled, or if you've lost your account a number of times, do not counter trend trade. If I see if I'm in a room and coaching and I have a trader counter trend trading, if I've got a newspaper, I'll usually give them a whack with the newspaper. Counter trend trading is banned. They're not allowed to do it. T25, pure price action trading. You've got channel breakout trading, that's new trend or trend trading. T98 is a counter trend reversal trading strategy. It's a lower strategy or a lower probability. However, when traded correctly, you've got a great risk reward, fantastic returns on that particular setup. Now, one of my all-time favorite strategies here is a T89. I also call it a snapback. I use angulation to confirm the trade, which is a term which you'll learn. Now, this is a counter trend trade, reversal trading. Traders, new traders, you are banned. Of course, I can't really ban you from taking these, but if you followed my advice in the course, and I spend a lot of time talking about the psychology of trading, please follow the trading plan that I recommend to you. If you are an experienced trader not netting a minimum of $200 per contract per day, do not ever counter trend trade until you learn to master trading with the trend. So it's a brilliant strategy. It's something to look forward to in 6 months time, but I don't want to be one of these system vendors that keeps coming back to you with the next best thing for you to purchase. I'm going to give it all to you at once so you've got it, but if you break the rules, guess what, you're going to fail. I'm sorry, but you will. So T89 is a brilliant concept, and just there you could see me shorting 10 contracts here at the market, just above the 89, exiting the market. We can see here now this was actually taken just a week or so ago. We had a beautiful T89 trade there. We had a beautiful T89. Then this one here, this actually with a high low, this was a T10. Then up here you can see here this was 839, and generally traders I start trading around 2:33 a.m. So this is just before I retired on a Friday night. Now, of course, I'm still trading Friday morning. That's Friday in the USA. So I saw this upstairs. I jumped in and jumped on it, and I shorted 10 contracts. Now, in actual fact, my stand on my trading dome, I've got 13 ticks. So this is on the 133 tick, if I remember correctly, chart NASDAQ. I have a standard, and I actually should have gone for about 20-25 ticks, which was down here. You can see the first level of support was my 89 and 200, where we spent a lot of time in the program talking about targets. I should have actually set my target down here, but I jumped out. It was nearly bad time. Jumped out, picked up 13 ticks very quickly. So the T89 is a beautiful, sweet trade to take. So we've got here another brilliant trade is your 89B. We're coming to an end of the 12 different trades that I teach you, but as you can see, there's a basket full of them. You don't have to, stop looking for the Holy Grail. I've done the research for you. It's what I do full time. The 89 bounce here is another high probability trade. Now, I'll occasionally take the 200B. It's a great trade, but you've got to be very careful with the 200 because quite often you're starting to get a bit of a rollover. The market is starting to roll over. But the 89B, here you are in on this candle here. This is a very high, it's got a great winning ratio. It's a very high probability trade, and it's easy to learn how to trade it in the right conditions. There are certain rules to it, but all of these are high probability trades. So let's go to the live charts traders. Let me get this out right, and let's review some trading examples directly from the charts. Okay, so what I've got up is the NQ133 tick. Now I've got all sorts of comments. I haven't taken them off, and I'll just explain some of them. Some of them might be beyond what the purpose of this video is, but you just might find it interesting. What I've got here is, before we move on to the main ones, this is a quick T19A. I shorted the market here. My target was at 200. That was for 13 ticks on 10 contracts. Now TradeStation, you can see clearly my trade entry. I also have a beautiful triple top here. So there's a whole lot of reasons why to take this trade. It was towards the end of the trading market. By the way, that was around what time was that? That was at around 10 past 5 in the morning AM my time. So it was getting towards the end of the day, trading day in New York. Now I don't trade the last hour or so of the market, even though we had a beautiful 200 bounce. That was a 200 bounce right there, and away it went then to the close. I just don't trade it. I just don't feel comfortable trading that time of day. Sometimes it can go all sorts of directions, and you can get trapped in the market. Now for the newer traders looking at this chart, the way I teach you is we strip back on video. I strip the chart back, so all you've got is the bare chart, and I lay one indicator on and explain what it does one by one. And some of these indicators you don't need to have on your chart if you're trading the top three setups. So after a period of time, when I say after a week or two of looking at these, you have these aha moments, and I want to mention that because sometimes I see when I'm training a new trader, I can see their eyes. I do a lot of one-on-one face-to-face coaching traders, and even when I'm using online, using GoToWebinar and some of the other Skype, I can virtually see their eyes glaze over. I really can. You pick it up fairly quickly, and it doesn't take long. But well, you had some beautiful pivot bounces here. We had down here, this is another beautiful T1 T2 just there. This was a T19A, and some T7. So after a while you develop and you really pick up these visually very easily. It doesn't take long. Whoops, and let me just go back here so you can see this comment. Oh, you've already got that one there. So as I mentioned here, I trade the 89 tick, the YM, during the main market hours. And let me just do something here. Pointer tracking. Sorry, I just want to give you a large pointer here so you can see this is probably better for you. So I trade the YM89 during the live market hours, the NQ55 tick during the after hours, the Globex market. So for traders in LA, of course, the market's closed around 1 o'clock. You get home from work. The NQ trades basically 23 hours a day, as all futures markets do. There's still some great trading opportunities. What you need to do is to drop the time frame down to a lower time frame. During live market hours, I'll trade the black gold, the CL, the oil 89 tick. Now traders, in our training we do and I show you how to use an anchor chart for using higher time frames. Now let me just talk about this, is that look, the more you have on, and the more screens you've got, as I say, the sexier it looks, but the more confusion that you get. The human mind can only comprehend 5 to 7 bits of information any one time. How you can avoid having multiple or a lot of different screens is by simply having longer term moving averages on your screen, which will show you what the higher time frames are doing. You don't have to have a bank of 6 screens. New traders don't have 6 screens, a maximum of 2. All it's going to do is confuse you, because also, as you've seen here, there are trades firing off left, right and center anyway. Back to here, the ES, I trade the 550 during live market hours and the 144 tick during the Globex, the after hours. On the euro dollar and the Aussie dollar, I like the 5 range charts. Once again, the setups work on all different time frames. So if you're an experienced trader, you probably know which time frame suits your personality, which market. And by the way, with that point, all markets have personalities. They truly do. Oil, because of news announcements, operates and acts totally different than the ES or the Forex markets. So after a period of time, you'll get to know your markets. So let's go through that's right, so this is the day market during Australian market. So this here is around 5 p.m. here, 5:30, where market's starting to come alive. So the volume just slows right down. But also on the the lower time frames, this is a 133. On the 55 tick, you can get some great moves, and it's perfect if you're only trading 1, 2, 3 contracts at a time. You start to get your volume up, you are going to either not get your fill before the market runs away, or you're going to get slippage if you execute a market order. So back to this, you had a lovely T7 up here. I teach you these, and T7s fire off every day. They're a highly high probability trade. Your T89, you had a T1 here. Now, by the way, the time of day here, I saw this actually at the time. It was too fast for you to get in. And in back testing, you got to remember, you need to check the time of the candles. So this is both a T1 and a T2. I doubt it you would have been able to get filled or in on that trade, but it was a perfect setup if you could. Another T89 off a pivot, just a beautiful trade. And you had another a T10 with a high low, a very sweet trade. Now further along here, I'm just going to keep going on this 24-hour period, and look, we've already been going 32 minutes, so I won't go across to too many other charts. So this is that one earlier I mentioned at 8:38, just before I retired for the evening. This was a beautiful T89 bang. They're just a rock solid trading strategy, but new traders, I don't want you trading them, and in training you'll discover why. A T2, just a lovely T2 trade. Got a lovely pivot bounce, another pivot bounce, a T10. You actually had a T10 just there as well if you had have taken these. I retired about this time because, as I mentioned, I'm up bright and early in the morning. So if we go along here, we've got pivot bounces, we've got all sorts of things here. Now we've got another T10 here, we've got pivot bounces left, right and center. Now just I was doing some training the next day with a trader, and I left this on. I just thought you'd find this interesting. Learning how to use trend lines and channel breakouts, which just have a look at this here. Now the science is not exact, but have a look at that here. You get 2 points of support, then you go along and looking for trend line breakouts. Look what I just did then. Look how it matches up almost perfectly when you model these. It is just amazing, traders, how these work. It really is. We then had a what else have we got down here? We got a T89. A little further along here, got a T89 again. Then you had a 50% fib retracement. We talk about fib retracements. That is from the high up here to the low. The market retraced 50%. We had another T2 which actually failed, so I'm showing you a failed trade here, but one of very few. Then away the market runs. Now counter trend traders, this is where you really need to be careful, is that we had T2s. Now that was a failed trade, but then bang, the winners left, right and center all the way down. And now this is where the counter trend traders, and particularly vanilla traders, you can get really hammered in these strong trends. pivot bounce, you had a lovely T10. This is some comments I had to some of my students here. Did you take these? We're just talking about these T2s that formed. Another T2, a T7. Now all of these are just great trades. You had another T. Now down here, for an example, you had a T2, and here it would have been, you would have been stopped out at a small loss. You can see here another danger zone here, and let me mention this. I think I mentioned it earlier along here. When your cyan line and your 200 is going sideways, stay out of a market. You're waiting for a fresh breakout. This is where the market is consolidating. I won't talk too much about that now because of time. I've got T2s, T1s and T2s, all winners. Look at this beautiful 89 bounce. It's come down. Now you've got to be very, very careful in taking T2 straight after a T89 and pivot bounce. When you get these pivot bounces, you don't want to generally trade against them. They're very dangerous, and you can see here, so I've got here a T2, but we're right on the pivot, and a T10. Now traders is only around, there's between 8 and 10 things or pieces of information that we're looking at here. So let me save it again. There's only between 8 and 10 things you need to learn. So for newer traders looking at this chart thinking I could never pick this up, remember the first time if you learned how to drive on a stick shift. Australians or Southeast Asians, this is for the Americans, they call it a stick shift. Over here for the our friends over in America, we call them manuals. So if you learn how to drive with a manual or a stick shift, remember when you first started to learn how to drive, you had 3 pedals. You got the stick shift, you got to use your indicators, you got to look at, you got to use the steering wheel, you look at it, you got what, I've got to remember all of this information, and I've got to watch the road. But within a month it's like second nature. Just like most of these things are second nature traders. It doesn't take long. Now what we've got here is a T2, but what's happening, we're getting what we call angulation, and we've got also something coming up here, a pivot. So these are all really logical things that you pick up very quickly. Now we're still on the same day of trading traders, so you can see how much price action and how many trades you can actually get in that time period. So moving along there, we then had a lovely T7 with the trend. We then had a pivot bounce here. Now another period there of counter trend, danger zone, strong trend, and this is why, now this is something I want to quickly show you. Here's why traders and even experienced traders, there's no need to counter trend trade. You get the sweet spots. Every market will have a sweet spot, and this is where I don't want to get into talking about your profit targets too much right now as we're running out of time. But as most of you know, once hit 200, I'll keep going because of these sweet spots, but I'll only give back 1 to 2 trades depending on where we are. That's another story for another video. But you get in these, and this is where you really it sets your whole week up. So we've got all of these downtrends here. Your stops are above these little pivot highs that you've got here, the little black dots, and away you go. So we've got T2s and T10s. We've got a T10, T2, T2. We've got a T1, T1 and a T2. We've got another T2. They're all firing off left, right and center. Then we go across here, and this is where now remembering I'm actively trading a number of markets here, so now you're finally seeing some other trades that I've taken. Well, what we've got here, I've got I'm not sure, okay, so I've got here, I've got a T10 I took here for 13.6. Up here I took under the 2% rule, a comment I wrote in. I think I took a snapshot for a previous, for earlier in the this recording here. So why did I take 2 trades, and where was my target? My target was the 89, my first port of support. You can see here I had a T89 here, and it was a T19. Then I had a beautiful T7 and a T10 at the same time. So I entered, but the comment I put here, I'm under 2% risk. Remember, never risk more than 2%. Here, this is early Saturday morning. time for me to finish the day. So then straight after we had another T7, we had another pivot bounce, and it's some other great trades, but I generally wrap the trading up. And at the same time, if you're watching me trade live, I had some other traders on at that time. We were doing some great trades on the YM as well. So traders, that gives you a great wrap up there of the futures. Let's have a look here quickly at the Forex market. This is the euro dollar, the 5 range, and the setups work, and we can see here just quickly we had a beautiful T18, you had a T10. Now all of these are very rules based, so I've just taken a random period here. Perfect T18, perfect T10. These are 100. You had a beautiful T2 and T1 right there, winner, 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 T10, T2 winner, T89 winner. You had a T10 winner. You had this is a T1 with the trend winner. You had there a T10. You still would have been in that trade there. Traders, these setups, you had another now one thing you always do when you see these really rapid collapses, you always check the timing just to make sure it wasn't a news announcement. By the way, I don't think it was, but let's just quickly look at the time. 2020 21. Oh no, that's right, no, you were in that one. That's fine, because remember, going back and doing historical testing, you just want to really check that to make sure that you're not cheating yourself, because some of these you never get filled on. Here you had up here you had a beautiful T1 with the trend formation just there, and away we go. So all of these are very mechanical. In that run, by the way, you didn't have, following the rules, out of all the setups, you did not have one losing trade. Now you are going to have losses. That is why we risk manage. Here you had a you had your T1, you had another T10. See this black line here, trader? This is why, this is our market direction. This is telling me whether I've had a T1 or a T10. All right, you had a beautiful pivot bounce. We had up here, we had another T89 right off there. We're up to 42 minutes. Let me put this on hold. I'm going to bring over the 55 tick. I want to show you something there. So traders, what I've got here is I've just pulled off one of my screens the 55 tick. Now this is the 55 tick on the NQ during the day. See, very choppy on this particular day, and then it started to take off. So once Europe opens up, which is 5 p.m. Australian time, when the European market, we start to get some volume really come into the market. And lovely T10 just there. See my black line going up there. Now see how our long term is stuck in the middle here, the stochastic. That is a huge sign you're in chop. That is not what you want to see. It's a time to stay out of a market. Look at my 200, look at my 89. We spend a lot of time talking about that and covering that in the training course. Then here, beautiful T89, beautiful 89 bounce. Then we get down to a T10. Now some of the traders may be wondering where this hasn't rolled over. What makes this a T10? Well, I've got a lower high to begin with. Then if you weren't sure on this one, you had one right here. You could have entered here, but you had one right there. Now if you had have entered on this one, and there's a reason why you wouldn't have entered, you're right on the pivot, you would have waited. Anyway, let's not go with too much on that. But then we had a beautiful T89. So what I just wanted to show you here, that it works on all time frames. And look at the market go. You had one there, you had another trade here, you had another trade here. Now down here you're starting to get into chop, but look at the time here. I'm 8:39 p.m. but what have I got down the bottom here? Let me move this out the way. Up here, just do a trend line. I want to show you this. Look at this area of support. We're bouncing. You got T1s and T2s all along here, but look at this support you're getting. So traders, what we've seen here is there are just so many different trading opportunities, and the concept is really all about learning when are the best times to trade, which are the best markets, which are the best time frames. Now remember, I mentioned curve fitting earlier. The different time frames are when you have lower volumes, so you're still using the same setups, but if you're trading, for an example, Forex during the Asian session, Australian session, your volume is well down compared to, say, the London session, where you can trade easily a higher time frame and have a lot more trades. So we're now up to nearly 45 minutes in this recording, so we'll wrap it up. So what do you learn in my Day Traders Fast Track program? 12 of the world's most powerful geometric, that is, patterns that repeat day in, day out, day in swing trading strategies for trend trading, breakout trading, retracement trading. Over 5 hours of clear and easy to understand online video instruction. Something just come to mind, by the way, traders. It's still amazing, and please, I don't want anyone to be offended. I just thought how many traders I come across, they'll think nothing of losing $5,000 to $10,000 in their trading account, yet they won't invest a few $100s in their training. Traders, remember, we're dealing with the best of the best, and I mentioned the 5% club, and here's what the 5% club is. Over 90%, that's right, over 90% of traders lose their money. Now these are put out by the NFA, put out figures, the CFTC in America. We get to see these figures now every month. Each broker in the US has to release their profitability of their traders, but over time we see how many accounts get churned. To be the best of the best, you've got to join the top 5%. We do that by becoming master traders. If you become one of my clients, one of my students, you are going to join. If you follow the rules, you will join the 5%. I expect that from you. You know, some of the testimonials and emails and clients I work with, and the reason I keep getting asked back to some of these larger clients is I've got 2 clients I coach every week. I coach. Why? It's no different than a professional sportsman or sportswoman. They have coaches they work with every week, if not daily. So getting back to this, I'm digressing. Indicator settings I give you, which allow you to customize common indicators. If you're a TradeStation user, I give you a complete set of my indicators, so you're fully set up. Others, I give you what the settings are, show you how to use them, how to set them up. NinjaTrader, by the way, NinjaTrader, I've just downloaded NinjaTrader. I'm hunting to set up similar if not identical indicators, so as I get those set up, I'll send those out free of charge to you anyway. Once again, I'm not about all these upsells and all that sort of thing. I give you and teach you 4 powerful money management techniques. What is the most important topic? Probably the most important, as I mentioned earlier, 90% is psychology. It really is. You are going to achieve master day trader status, traders. You have to believe it, and I'm going to thump it into you. You can see me with my fist now if you could see me now, because really you can do this. What you got to do is get rid of that counter trend trading until you become a master. That's what it's really about, you know, is mastering the world of trading. Now, as mentioned earlier, your investment's only $197. Now, as Warren Buffett said famously, focus on the value, not the cost. Traders, I'm going to fast track you. I'm going to save you years of time. I'm going to save you a fortune in the loss of your trading account, purchasing trading systems and strategies, and joining rooms and all that sort of thing, other live trading rooms. Look, you've seen what I do. You've probably got an idea now. This is my passion. This is what I do, and the biggest thing to me is the potential loss of a life of financial freedom. That is, you know, who trains the trader? Most of us go out there and train ourselves unless we work for an institution. And if you work for the institutions, and like with some of my clients, they have full-time coaches, their floor manager, their boss. If they don't follow the rules, they get sacked. In our business, who sacks us? Oh, we just go along. It might be our partner. For us males, it might be our wife eventually says, right, that's enough, no more trading, I'm sick of you losing money. It's soul destroying. You know, you have to do something about that. Okay, you've got to learn how to trade correctly, and for many of you it means going back to the drawing board and starting again, and that is what I want to do with you. So for any questions or to take it any further, please feel free to drop me an email to order. Please email me directly. And by the way, I don't have a fancy website or anything like that, just mainly because of some of the very big clients I've been working with, and with one of them I'll be telling you more about it very soon. We've got a global launch coming up with a particular client that's going to be very big when we launch that. But for further information about my institutional and private coaching services, as I mentioned, I work with professional traders. Yes, I do the training with some of my newer day traders, but a big part of what I do is with the professionals. Now I only do between 10 and 15 hours of coaching a week, so you know, I don't do very much coaching at all. But I'm rambling now. Please subscribe to my YouTube channel, and I'll see you in my next video. Now I don't know when you're watching this, but I am tomorrow, now just with the time where I am now, tomorrow I will be doing the second part of my trading price patterns. And what I didn't talk about there, I perhaps touched on it, trading price patterns using the wolf wave is something that we use. Very high probability setup, very high. Thank you, traders. Look forward to having you as one of my clients.